Can you start though by explaining to the audience what title work is and why it's important when you're buying a building?
Sure. So title insurance is sort of, I'm think about the best way to explain. If I jump around a little bit, please forgive me. But just to sort of differentiate between, let's say, title insurance and any other type of insurance, the main difference is, the big difference is that with title insurance, it's a one-time payment. Okay, you make your payment at the time that you purchase the policy, which is typically at when a transaction occurs, the purchase, and that insures you for the life of the policy until you sell it or whatever. Okay, whereas regular, like with your health insurance, auto insurance, you got to keep paying to maintain your coverage. So at the time you get, so what is a title policy? A title policy, what does it cover? It covers a certain snapshot in time of the condition of title at the time that snapshot is taken. So to put that into a real life example, I buy the property. I'm buying a property. The title company will issue a report, and what's called a commitment. And the commitment is the title commitment will have on it a listing of all items of record dating back for, basically till the beginning of time, or really until the people started, began to keep records. And it will show, okay, there is an existing, it'll show, oh, there's a mortgage here, right? The person you're buying it from has a mortgage, okay? So that the lender's mortgage is recorded, and the commitment will pick up the recorded mortgage and say, okay, this is a mortgage on the property, and there are certain other, there are easements on the property, certain rights other people may have to use portions of your property. There may be certain tax liens on the property. Again, anything that's recorded in the Register of Deeds will, or should at least, be picked up in a title search. So now I'm going to buy the property. I don't want, we'll use you, I'm buying it from you, Lynn, right? I don't want the obligation of your mortgage to remain on the property when I buy it, right? I may have my own mortgage. I don't want to get stuck with two mortgages, right? So at closing, the title company there's two functions. They'll issue the policy, and they'll also do the ministerial closing work, typically in Michigan. That means that they will make sure that the mortgage, your mortgage, right? You are the seller. Your mortgage is paid off from the closing proceeds or otherwise, right? Because the closing proceeds are going to go into escrow with the title company. And then they're going to go ahead and make sure that those proceeds are wired to the mortgage company. And then they will go ahead and record the discharge of mortgage so that your mortgage is no longer of record on my property. And my property will just have my mortgage on it, and certain other, easements that'll just, that carry over and stuff like that. So the policy ensures that snapshot in time. Okay, so right now the policy is saying, okay, Elliot Indig, you own this property, subject to only two X, Y, and Z, these encumbrances, these items on title, whether it's my mortgage or anything else. Now, let's say a few years down the line, some guy comes knocking on my door and says, I don't know how this Lynn person got the property. I own the property. Here's a deed. I never transferred it. It's of record. Okay. And, normally I can, without, so what do I do now, right? This guy claims he owns the house. I claim, this and that. I go look for Lynn. Lynn's gone. She left the country. She's on a cruise and she can't get back because of COVID. Right. And, so, yeah, and, I can't track her down. So again, obviously, so what do I do now? So I go to the title company, right? And I say, title company, apparently this property was not owned by Lynn. And again, it could be that you really thought you owned the property, because again, stuff happens all the time, right? You may have been sold this, again, this person may be lying. You may have bought the property from someone else who was messing around. Again, it could be any number of myriad issues. Okay, again, the example is just illustrative. I go to the title company and I say, okay, this is what's happening here. Someone's claiming that I don't own the property. You ensure that I own the property. So the title company so I make a claim to the title company, and the title company will either accept or deny the claim based upon the language of the policy, just like any other policy of insurance. And this, you know, is a most classic example, something that obviously they typically would cover. And they would first hire out, they would hire counsel on your behalf, meaning they would pay for counsel on your behalf. Okay, they would pay for an attorney, right? The attorney works for the insured, right? So I'm the insured, right? The insured, I have the policy under my name. The title company will pay typically for attorneys to represent my interest. The attorneys work for me, okay, because they're just paying for them to negotiate to figure out what's going on. Because sometimes, let's say, let's say the person filed a lawsuit, the guy who came knocking on my door, okay, filed a lawsuit of quiet title, so they hire attorneys, and then they go through the court process, and at a certain point, they'll either take the process to the end if the title company feels there's a viable something they could do to clear title, or if they are required to pay that person money or to pay me money because that person wants the property, and so they can pay, whether they can pay, it's either going to be the policy limit. So let's say the policy limit was $200,000, so that's what I bought it for, I bought it for that, or the value of the property at the time, depending on a number of different factors. So that is what title insurance does. It allows the subsequent purchaser or lender, their owner's policies and lender's policies, right? Lenders also get title insurance.
Right.
But for instance, when you get a mortgage, when you buy a property, the lender will also get, because the lender also wants its interests protected as well. Because if there's another loan, then the lender can't foreclose because they're second behind another mortgage. So the same type of thing for lender, and that, in a nutshell, is what title insurance is and what title insurance does.
Okay.